Hello guys, and welcome to today's post-market analysis video. It's the 11th of February 2022 and a very choppy day today, highly volatile. See guys, learn to study price action, learn to study market structure. See what happened here today. Let's discuss the price action for today first. See, Nifty opened with this candle here, which was a neither bullish nor bearish. It was red in color, yes, but it had this very long wick on the bottom. What do long wicks suggest? Long wicks suggest that there are buyers on the bottom. Where did this candle open? A strong support or a demand zone from yesterday. So that is exactly where price opened and took support today. Okay, but the candle was red in color. You can see the first candle, this was red in color. Now going back to today, see, the candle was red in color and very second candle broke down from that range. Okay, so the very second candle broke down, and what happened there was this wick was already present up to this level here. Okay, now let us plot a line there. Okay, we've drawn a line here. So now see, you can study price action. See how it's the same level that provides support to so many candles. What was the candle that broke down out of it? It was the 9:45 a.m. candle. Okay, so from 9:15 to 9:45 price was taking support at that same first candle low. So that is why I always say that the 5-minute first candle low is a very important level, and this wick came down all the way up to this level here. Now this becomes the new support. Okay, so this was the previous day's support, but from here it is changed into a support at this particular level here. So you do not take a long trade thinking that the market has broken out of the previous day's range and you go short on this second candle. No, you don't do that kind of trading, because even though this here was the previous day's low, see, let's mark this, and this candle had broken out of that range, the very second candle, but now the new low happens to be this, that is today's first candle low. So yesterday's previous day low, that range is no more important after the today's first candle low with such a long wick below it. Okay, let's move ahead now. Let's see what the market structure shows us here. How do you analyze this position now? See, from here right up to this point price fell. Okay, you can see here that this was the demand zone coming from the 9th of February 2022. We are already marked this area, and you can see the kind of price action here. Strong red candles, see, strong red candles, and that level was broken. There was some support provided by that level here, see here, but these candles, both of these candles you can see here are green, but they are dojis. So price is not going to be pushed further up. That was clear at that level. They were dojis, they were not pin bars, no reversal sign there. And then price broke down from that level with this candle right here, and then it came and filled the gap. By that time it was pretty obvious that the gap here was going to be filled. This was the gap. You can read this. I've written here gap. If you are watching my videos daily and if you are taking down those images from Twitter, you will know that I had marked a gap since yesterday there, and markets don't like gaps. Sooner or later, more sooner than later, they are filled. And then the day kept going in a single range today. It traded a lot of time within this particular zone here, and then this was the high of the day. It tried to go up to that level, but before Nifty could reach that level, Bank Nifty had reached the high, and so at that very particular moment Nifty also from here took a U-turn and fell. And then again it kept trading in this particular zone for a long time later, and there was not much difference between the open and the close of today. So see, you can see the open was roundabout here and the close was roundabout here. So it's about 100 points, and these days 100 points difference between the open and the close in Nifty has become quite common the way Nifty moves. So in that respect, no real trading opportunities in Nifty today, but you could see that price just kept going in a single range and ended 100 points lower. So now based on today's price action, what do we see here in Nifty? See, let's go ahead and check this. So we don't need these levels anymore. Let's delete the demand zone. Let's delete all these levels. Let's delete the gaps also. You can delete these arrows here, delete the gap. Okay, the Virgin CPR still persists there, so you can extend that level on the bottom. You could see that we had marked this level coming from, see, I had said that whenever a major supply zone is broken, it becomes a support if price comes from top of it. So exactly this is what is seen here. So this was the supply zone that we had marked, that was coming from the 8th of February. You can see this here, that is the 8th of February. I'm zooming it for you. See, this is the 8th of February. So it came from that day, and that supply zone acted as a strong support today. Can you see the price action here? I'll zoom it for you. Can you see these areas here? See how price takes support. How many times did price take support there? You can see this. 1, 2, 3, and then after creating this base here, it took a bounce from here right up to here. Okay, right here at this level, as I said, Bank Nifty had come over towards its own high, so Nifty also reversed. Alright, let's go forward now. So this is the way you should read levels, and important levels tend to stick for multiple days. So let's extend that level. That level still stays. It is an important level. We should adjust this level up to the previous day high right here. You could mark a zone here, not very necessary because we know that Bank Nifty had reversed, so Nifty had reversed. But if you're more comfortable with zones, you can mark a zone like this here. But if you were to ask me, I personally would not mark it, but if you're comfortable, please go ahead with it. Okay, here you're just supposed to extend all these levels that you see coming from previous days, and here we have a level on the top. So these resistances will persist, and these supports also. This is a demand zone coming from the 8th of February. Yeah, so I think this should be all for levels for Nifty today. I will post these levels on Twitter and you can pick up from there. And now let's head over to Bank Nifty and see how Bank Nifty did today. Alright, so this is Bank Nifty for you. Bank Nifty had a more obvious kind of a pattern here. See, this was a bullish candle. Okay, what do you know here? So many times these candles I have explained to you that these are buyer candles. Okay, these are buyer candles. So since you see that it's such a long wick here, and it's also breaking the previous day low here, it breaks into the previous day range. Okay, so the previous day low support acting very strongly, plus this nice juicy pin bar here, the first candle. What does it suggest? That there are a lot of buyers in that area. Okay, whenever such a thing happens, you can see how price reacts on such days. Price finds it very difficult to break that day's low as well as the PDL when they come together on the same day. So let's mark a line on the low of this candle. See, this was the same day's low, and you can see how difficult price finds to drop below it. So breakout candles, even if you can see certain breakout candles like these today here, the red candle, they're not very convincing. See, no candle has convincingly closed below the day low. In fact, this was the only candle that closed below. But do you see this wick here now? Let me just delete these drawings. See, even if this were to be the day low here, which becomes the next day low, this becomes the next day low. Do you see any candle closing below it? No. Then after this wick, this becomes the current day low. Do you see any candle closing below it? No, you don't. So here you can confidently see that price is not going to break out of the day's low range to the downside, right? And this is what exactly happened. In fact, you can see if you were to draw a line from this to the end of the day, see, you can see that right up to here, even the last candle of the day could not close below the day low support, that is the same day support, the today's support, that is the 11th of February support. So this, on such a day, what you have to do is you have to look for such patterns as are made in sideways market days. So what patterns are those? I've already talked about them in the previous videos. You can learn about them by reading books also. A very favorite pattern of a lot of traders is the double top pattern, and that is exactly what we saw today. So price made a double top pattern in Bank Nifty today. If you can mark this day's high like this, okay, this was the day high, and you can see that this here was the pattern that it made, which is called a double top pattern. Okay, a red candle taking out a green candle right at the day's high. So this was the same day high, that is today's high, and you can see how price ranges between the two levels. See, from here to here, then from here to here, down, and it just keeps bouncing within the same line. So what do we know from here? See, I'll just draw it for you. If this is the range, price will keep bouncing between these two levels like this. So a range bound day, a day in which price keeps bouncing between two levels made by price on the same day. So that is how you trade on this day. So your entry, wherever you saw that price had reached the same day high, and you see this kind of a pattern where the red candle takes out the green candle, you can go short on this candle here. So you can take your entry at the low of this candle whenever the low is broken. You can keep your SL up a little bit here, so just to be safe, and then you can take your target back at, say, the day's low. So where was the day's low? You can mark a line like this to be safe. You can take, you don't want to go to the absolute low of the day, then you can take your profit somewhere at this level. So maybe this was the place where you could have taken your profit on the very last candle, or if you don't stay in the trade for that long, then it would be fine to take your profit anywhere at the previous day low also, which is this level. So that is also fine. But anyway, even if you had taken the trade, then you can see that this was your SL. See how small your SL is, and this becomes your target. So this is how big your target is, and this is how small your SL is. So that is the way to trade on such days. Alright, so I think I made it clear how to take entries on such days when the price stays within a range. Now let's go back and check what all levels it had respected as we had drawn them yesterday. So obviously we've seen it respecting this level here as well as this level here. You can see I had said yesterday itself that mark this zone. Even though it is a virgin CPR, it is not a virgin CPR, but whenever you see very small candles like these, the bodies of very small bodies of candles within the CPR, usually that CPR also acts strong on the next day. So that is why I had told you to mark that line off, and that is why I had plotted the line in yesterday's images and videos also. So the same levels have been respected. You can see them here, and then you can see the level being respected right here also within this range. See, within this bracket. So that is how you analyze price action on any given day. Okay, now what we can do is we can actually just delete this level here for now, since it overlaps with the CPR for the next trading session. We can just delete these levels. It's right within the CPR, and this is the day low. So what you can do is you can just mark a zone down here. You can put a box around this, and since price could not break that level, and price also jumped from this level here, it made a base, and from this level it jumped up from here, right? So this becomes the demand zone. In my experience, the PDL being so close, only the PDL will be important, but still for convenience purposes, let's mark the PDL here and also go ahead and mark a box around it, as we always do for confidence purposes. So let's include the wicks there, and we can put a box around it like that. We can also actually push the box down a little bit. Yeah, that zone will be enough for now. Okay, and here again the PDH will act as a strong supply zone, since price could not, twice it attempted here as well as here, but could not cross it. So don't trade or don't take long trades if price opens within the day's range on Monday. If there are any more levels, I will adjust them in the Twitter images. You can see the demand zone coming from the 9th of February. This is the one that we have already marked in blue here, and we're just extending it. So anyway, we have all those levels ready on the charts. All other levels you just have to extend. Yeah, and more importantly here, of course, we do find the Virgin CPR from today. So you have to keep this Virgin CPR ready also. So this is another Virgin CPR that we have added. And looking at Nifty, I just realized that I have missed marking the Virgin CPR. So what we will do is, we will just remove this level from here, which anyway overlaps with the CPR, and just drop a new box around it. So it becomes clearer and the charts stay cleaner for us. Alright, so that will be the important levels for Monday. I hope you're finding these videos and levels useful. Please drop in your comments in the comment section below, and do let me know how these levels help you. I hope you enjoyed this video. If you have, as always, please hit the like button and also subscribe to my channel and hit the bell icon so you're notified every time I post a new video. Thank you guys for all your patience and for your love and support. I'll catch you in the next video. Have a great day and a great weekend ahead. Take care and bye-bye. I'll see you in the next one.